Hello, everyone. Welcome to the market opening bell on Thursday, April 3rd, 2025. The market is awaiting the latest tariff announcements from US President Donald Trump, leading to mixed performance in Hong Kong stocks. The Hang Seng Index opened 39 points lower, dropping 226 points in early trading to a low of 22,981 before rebounding. It briefly rose by as much as 186 points, reaching a high of 23,393. In the afternoon, it traded in a narrow range, closing down 4 points or 0.02% at 23,202. The X-share index fell 6 points or 0.07%, closing at 8,532, while the Hang Seng Tech Index gained 19 points or 0.4%, ending at 5,426. Total market turnover for the day was 216.5 billion Hong Kong dollars, down from 250.2 billion Hong Kong dollars the previous day. Mainland Chinese market started steady, with the Chinex index briefly dipping in the afternoon before stabilizing with slight gains amid quiet trading. The Shanghai Composite Index closed at 3,350, up 2 points. The Shenzhen Component Index ended at 10,513, up 10 points or 0.1%. The CSI 300 closed at 3,884, down 3 points, while the Chinex index finished at 2,104, up 3 points or 0.1%. Combined turnover for Shanghai and Shenzhen markets was 974.4 billion yuan, a decrease of 157.8 billion yuan from the prior day. The renminbi US dollar midpoint rate was set at 7.1793, down 18 points. Technical analysis, the Hang Seng Index tested the 23,000 level again, hitting a low of 22,981. While 23,000 held for now, the index continues its downward trend, with the 9-day relative strength index hovering around 42, showing little momentum. The likelihood of 23,000 eventually breaking remains high. If it does, the next support level is 22,550, with short-term resistance at 23,450. Hong Kong market highlights. Leap Motor saw its share price surge, rising over 15% intraday to 58.3 Hong Kong dollars, a record high. It closed at 57 Hong Kong dollars, up 6.55 dollars or 13%. Leap Motor announced delivery figures showing 37,095 vehicles delivered in March, a 154% year-on-year increase, surpassing leading brands like Li Auto and XPeng to claim the top spot among new energy vehicle startups. Additionally, Leap Motor's recent financials reported a 92% revenue increase to 32.16 billion yuan in 2024, with its gross margin improving by 7.9 percentage points to 8.4%. In Q4, it achieved a net profit of 80 million yuan, making it the second NEV startup after Li Auto to turn profitable in a single quarter. The National Integrated Circuit Industry Investment Fund, so-called Big Fund, recently reduced its stake in SMIC on March 28, 2025, selling approximately 11.3 million A shares at an average price of 48.28 Hong Kong dollars, cashing out $545 million and lowering its holding to about 6.9%. This isn't the first disposal over the years. Example, April 2021 and 2023. The big fund has trimmed stakes in SMIC and other semiconductor firms. Such moves typically align with the fund's investment cycle and exit strategy. Phase 1 is in the recovery stage, while Phase 2 focuses on emerging areas like materials and equipment, suggesting the reduction of mature companies like SMIC is to reallocate capital. As China's leading foundry, SMIC receives significant early support from the big fund. However, with technological progress, 7 nanometer entering risk production, the fund may view SMIC's role as shifting from an incubator to a market driven entity, reducing its stake to lock in gains and redirect funds to areas like semiconductor equipment or domestic substitution tech. The move might also reflect caution about SMIC's current valuation or growth potential. Financially, SMIC's 2024 revenue grew first quarter 2025 first quarter expected to rise 10 to 12% year on year, but profits faced pressure. 2024 net profit down 26.31% due to price competition and high cost 7 nanometer investments. Technical analysis, share sell by strategic shareholders typically brings short-term selling pressure. SMIC has fallen below its 10-day, 20-day, and 50-day moving averages, with its 9-day RSI or at 34, indicating a continued downtrend. If it breaks below 44 Hong Kong dollars, it could test support at $40, potentially leering the 100-day moving average, currently around $38.5, rising by about 0.2 Hong Kong dollars daily. US stocks saw volatile trading on Wednesday, opening lower but closing higher. The Dow Jones Industrial Average fell as much as 360 points at one point, but later rebounded, briefly rising 392 points and closed up 235 points, or 0.6% at 42,225. The Nasdaq Composite ended at 17,601, gaining 151 points, or 0.9%, while the S&P 500 closed at 5,670, up 37 points, or 0.7%. The Nasdaq Golden Dragon China Index, which tracks Chinese stocks listed in the US, slipped 0.08% by the close, with Alibaba dropping 2.24%. The Hang Seng Index night futures settled at 23,094, down 115 points, trading 109 points below the Hang Seng cash close. Tesla reported a 13% decline in first quarter deliveries, underperforming market expectations, causing its stock to drop as much as 6.8% during the session. However, after rumors surfaced that Elon Musk might leave the Trump administration soon, the stock reversed course, closing up 5.3% at $282.76 US per share. Separately, data from China's PCA, Passenger Car Association, showed Tesla sold 78,828 electric vehicles in China in March, down 11.5% year-on-year, but up a significant 157% month-on-month. Several major tech stocks rose, with Amazon gaining 2% amid reports it may join the bidding for TikTok's US operations. Nvidia edged up 0.25% and Apple rose 0.3%. However, after the US market closed, President Trump announced a minimum 10% tariff on all goods, with higher tariffs imposed on certain countries, triggering a sharp decline in after-hours trading. S&P 500 futures fell 1.6%, Nasdaq 100 futures dropped 458 points, or 2.4%, and Dow futures declined 186 points, or 0.4%. In after-hours trading, Apple fell 5%, Tesla dropped about 4%, and Nvidia declined 3%. Large import-dependent stocks face selling pressure, with Nike sliding over 6% and General Motors falling 3% in after-hours trading. On economic data, ADP reported that US private sector employment rose by 155,000 jobs in March 2025, exceeding expectations of 105,000 and following an upwardly revised increase of 84,000 in February. Our stock pick today is CSPC Pharmaceutical Group, stock code 1093. CSPC Pharmaceutical Group has been rapidly advancing in innovative drug research and development, achieving excellent innovation outcomes. In the field of biologics, it has successfully established the leading antibody drug conjugate ADC platform, with over 10 ADC products advancing into various clinical stages. In small molecule development, it has pioneered the use of AI technology for design and screening, with some of its small molecule drugs successfully licensed to international pharmaceutical companies, sparking a domestic trend in AI-designed small molecule drugs. In cell therapy, it's the first globally to advance CAR T therapy based on LNP mRNA into clinical trials, targeting multiple myeloma, systemic lupus erythematosus, and myasthenia gravis. In long-acting drug delivery, it has developed an in situ gelation platform, pushing long-acting formulations into clinical stages. In nanoformulations, it has invented a new albumin nanodelivery technology. In terms of technology, the group has built 8 major innovative R&D platforms, including nanoformulations, messenger RNA, small interfering RNA, antibodies, fusion proteins, cell therapy, and antibody drug conjugates ADCs, providing robust support for innovative drug development. The group boasts strong commercialization capabilities, with a professional marketing team of over 10,000 people, extensively covering medical institutions nationwide. It's currently actively expanding into lower-tier markets, tapping into the potential of county-level markets. On the R&D front, CSPC has assembled an international team of over 2,000 researchers, with R&D centers established in Shijiazhuang, Shanghai, Beijing, and the United States, focusing on key therapeutic areas such as oncology, neuropsychiatry, cardiovascular, immunology, and respiratory, digestive, and metabolic diseases, and anti-infectives. The group has a rich innovation pipeline and has been ranked among the top 25 pharmaceutical companies by size of pipeline for 2 consecutive years. Currently, has over 200 innovative drugs and formulations in development, including more than 90 large molecule drugs, over 60 small molecule drugs, and more than 50 new formulations. Over 160 clinical trials are underway, with an estimated 50 plus new drugs or new indications expected to be submitted for marketing approval by the end of 2028. Recommended buy at 5.4 Hong Kong dollars. Target price 6 Hong Kong dollars. Stop loss at $5.1. I personally do not hold the above stock.